Hello, everybody. The market continues to be very resilient in the face of extreme bullishness. Even though I continuously think that the market is going to try to top out at any moment, the market just continues to move higher. And what was good to see for my long positions on Friday was that there was, after the early morning sell off following through from the Thursday sell off, stocks found a floor and then slowly rallied throughout the rest of the day with the NASDAQ and NASDAQ 100 closing near the high at their highs. S&P 500, Dow Jones Industrial near their highs, but the Russell 2000 lagged a little bit. So keep that in mind. We're still up at nosebleed levels, and it's quite possible that new long signals now might be fake outs. So I'm trying to buy the long positions that are going to have the least amount of risk possible for the previous possible measured move. So let's start out with VLP, Valero Energy Partners. First off, it's an LP. Now that an Interactive Brokers cash account in my IRA no longer allows LPs. This is only going to my margin account, but it's a pretty simple trade. You can see that it's been building a series of higher lows, and even here, higher low right here, kind of coming to this more apex line right here, this little triangle pattern, and even a larger triangle pattern right here. So it's right at that apex line. Wants to break out, it looks like, after the huge volume surge on Friday. BOP confirming that volume surge. You can see the green BOP here is actually taller than the green BOP back here. That's positive divergence the entire way through. That's what I want to see. VLP, CanSlim Quality, also confirmed in a volume surge scan. So I'm going to put 3% of my account capital in this. My limit's going to be 49.64. So I'm not going to pay any more than 49.64. And then you can put one stop at 48.50 and then a second stop at 48.25. But that's splitting hairs to me. So I'm only going to have one sell stop on this position at 48.25. It triggers 48.24. I'll be all out of VLP, but excellent possible reward risk ratio basing this on the previous measured move from the December. Let's just use the breakout area over here to this recent high. We're looking at a possible 22% gain while we're only risking about a 1.5% loss. So I'll take those odds any freaking day whatsoever. So VLP, that's the best new long position, highest quality. Now INFM, extremely liquid stock. Decent stock, but technically it's speculative, so it's not on the main long positions page. But once again, earnings winner, pulled back, lower volumes at pullback. Now I know the volume is about average here on the pullback, but as it started to drift lower and kind of tighten up here, you can see volume dried up. It kind of moved a little bit higher on Friday. It's maintained its max green BOP the entire way. Not shown on this chart, RSI and MACD is starting to curl up slightly. So we're kind of getting a confirmation there. And I tell you what, this is excellent potential. If we can even get it to go back to the old highs around $12, and then I would assume that it's going to want to break out to new highs, and we only risked a 10.68. I'm going to take 20 cents to possibly make a couple dollars every day, or even $1.50. So INFM, I'm basing it here. Long position, limit order 1090, cut loss level 1068. It trades at 1067. I will be out of this long position. Tight, tight, tight stop. I'm looking for a measured move similar to the one back here. So once again, I'm looking maybe for a 36% move for a 1.5% risk. I'll take that any day. And even a move to the old highs, we're looking at about a 10% to 15% gain to only a 1.5% risk. Once again, I'll take that any day. So INFM used to be CanSlim quality stock, not so much anymore. Speculative. It was in my BOP scan, max green BOP 5 days. So 1% of my account capital into this name. And then another new long position. This one's a little different. ROX. It's a Fibonacci retracement play at the lowest Fibonacci retracement level. The, what is it, like 23%? I guess that's the other way. So right around the 77, 78% level is where ROX is finding support here. But more importantly, the support level it's finding is right around $1, the 95-cent low. And it's right around the even $1 mark after a huge volume surge move up. Had another volume surge, and then as it pulled back, volume got quieter, leading to this bounce here. So our risk is well defined. Possible potential move. I'm seriously looking forward to try to get back to 145, if not 145, 115. And considering if we get long at 102 and we're only risking a move to 95, I'll take that trade any day because I'm looking for a runner here. Only 0.25% of my account capital. I wouldn't put more than a grand of my own money in this thing. It's just too speculative. If I had $1 million, then yeah, sure. In this, like in the account that I'm running, then sure, I'd throw it all, not throw it all, but I put a few more grand into this thing. But as of right now, it's a mid six-figure account that I'm working with. I only want to invest 1,000 of about a $500,000 portfolio. Best safe than sorry on these runners, especially in a market that's up here at nosebleed levels. And then there's GST, beautiful ad signal GST. Not beautiful, but it's really nice. If it would have max green bop the entire uptrend, and this was a big volume surge and a pocket pivot point signal, then it's beautiful. But on its own merit, it's very nice. You got a nice, quiet, low volume pullback right to this upper trend line. If we just connect, I mean, we can connect all the way through here and just go all the way up right there. And you can see minus this little dip in November, it bounces right off this uptrend line. And it does so quite nicely, to be honest with you, and it doesn't make a whole lot of gains, which makes it a nice ebb and flower. So hopefully this can continue on into perpetuity. But the bounce is coming off the upper trend line right at the 50-day moving average. Little surge in bop, little surge in volume. Beautiful overall chart. And once again, I'm basing this even on a measured move from here to here. So if I'm looking at a 55% move, and if I'm only risking about 5% to the lows, 177, that's about a 10-to-1 reward risk ratio. I'm going to take that any and every day, no matter what. So GST, ad signal, only in one scan. It's got to be halved technically because it's an ad signal. So only 0.5% of my account capital goes into this. But GST, ROX, INFN, VLP, all very similar signals. The volume surge, the bop surge, or the nice max green bop in INFN. But the most important part is the bounce right at support, the good reward to low inherent risk ratios. You got to take all these trades. All right, everybody. I'll see you in the chat room in the pre-market on Monday. Aloha.